What's up, guys? Welcome back to a brand new economic overview. In this week, we're going to be looking at the dollar, oil, and the US stock market, as well as a bit of South African stock market, just to mix it up a bit. Hope you enjoy. So, starting off with some headline news. This coming week, very important week for us in the markets, as we'll be getting the consumer price index. Now, in this article, Powell had signaled last week that while the Fed had marked some progress towards bringing down inflation, policymakers did not have enough confidence to begin trimming rates. The minutes of the Fed's June meeting further this notion. So weaker than expected labor data from last week ramped up hopes that the labor market was cooling, giving the Fed more impetus to begin cutting rates. So last week we had data signaling that we could potentially be at the end of this rate hike. I believe we are at the end of this rate hike. It just depends on our inflation data if we're going to be getting the rate cuts sooner than expected. So we are actually expected to see the first initial rate cuts probably as close as September. So softer than expected non-farm payroll data ramped up optimism that the Fed will begin cutting rates by September. Powell's testimony is expected to offer more cues on that front. So I believe CPI data will be the leading volatility indicator for this coming week, this as well as crude oil. With CPI data looming on Wednesday and Thursday, I think this could be that volatility that we need for some good moves within the stock market as well as currency market. So the US Coast Guard warned of possible Texas port closures for Corpus Christi to Houston and began restricting vessel traffic because of tropical storm Beryl. I don't know if I'm pronouncing that right, but it starts with a B, which is expected to become a hurricane before making landfall by Monday morning at Port Lavaca. This, as well as our crude inventory report this week, could fuel the fire even further and push oil up through the descending trend line. So if you take a look at the daily time frame, you'll see that we are currently under a descending trend line. We have touched 2 times. This will potentially be the third time. As you see from the start of this week, we have seen some bearish momentum picking up for crude oil, expected heading lower. So with crude inventories reporting this week, giving us that volatility and a possibility of a increase in demand for crude and oil products, could this potentially be our driver to push crude oil through this descending trend line? Let's see. Back to the JSE. More positive signs. The SA budget reported its first primary budget surplus in 15 years. 3 months of no load shedding, a peaceful and globally endorsed general election, slight improvement in the mood of business people and investors, and we can start seeing one, maybe two interest rates before the end of the year. With this positive news in mind, I think this sets us up for a very bullish JSE. With interest rates expected to decline in the next 12 to 18 months and a business-friendly environment for our businesses and companies, I believe the JSE could only positively benefit from these statements. If we take a look at this interesting chart showing you foreign flows that potentially could indicate that South Africa is beginning to become an economy that foreign investors want to invest in. With consecutive upticks for the first time in quite a while, this can only mean positive things for our South African economy and South African-based companies. With foreign investment coming back into South Africa, this is a testament to potential confidence that they have regained for our South African economy and sight of potential growth for their portfolios. At the end of the day, why would investment go towards a foreign economy if that economy doesn't provide consistency, stability, growth, and exudes confidence for that investor? Let's head over to some charts. So starting off with the S&P 500, I firmly believe that the S&P 500 is a bit overextended. Although we do have some positive signs of possible rate cuts happening in the near-term future, I don't think that the amount of confidence regarding those rate cuts facilitate this amount of growth within the last week or so. I believe we can see a bit of a retracement this week or a potential sideways market, just so that the market can get a fresh breath of air before possibly going higher on factual validated data. Heading over to the FTSE 100, as I mentioned last week, this area of interest will be a crucial level of interest for the FTSE 100. We have a lot of support over here and a lot of potential buyers. Last week, we dipped into the support level over here and continued higher, a crucial move for the FTSE 100. South African top 40. Currently, our area of interest sits about 74,500. We have an uptrending pattern that looks like a potential reversal, but also could lead to some substantial moves to the upside. Our 2023 high sitting at 75,305, sitting close by as well. I believe we could potentially see the market consolidating within this zone before moving higher. If we see a break of this zone to the downside, I believe our near-term support would be this ascending trend line. I'm pretty bullish on gold still. I have a few positions in gold ETFs. Depending on the total volume, we get traded on the ETFs just for a measure of commitment. I believe we can have a bit of a retracement to the descending trend line before going up higher. Gold could be driven this week by skepticism and near term pessimism regarding the hurricane in the States and regarding overall oil consumption globally, with the crude inventory coming this week and CPI data. Silver. Silver had a nice clean break of our area of interest. We mentioned last week that our area of interest sitting at about 29.5 to 29.75. We had a clear, nice, impulsive break of this zone, indicating that silver will be moving to the upside. I believe we can potentially see a retracement of silver, perhaps to our uh, SMA. If not, our ascending trend line will do. I do believe that we'll see a lot of volatility with crude this week. We have a lot of data contributing to overall crude performance and overall crude usage. And I believe this hurricane in the States could facilitate a lot of volume for this pair. Currently, it is in an area of interest, and I think perhaps we can potentially see a bit of market manipulation heading to the upside, potentially taking out a few stops and then searching for that liquidity before edging down lower. At the time of recording, I'm still bullish on the dollar. I do have a position in US dollar Canadian, a long position in US dollar Canadian dollar. I think we can see some dollar strength coming in this week, depending on the data. I, I believe this last week or so's sell off is overdue for a potential correction closer to our 20 moving average. Uh, Crucial level for me on the dollar index will be the 104.4 level to 104.6 level, as I believe that's where the buyers will be stepping in and taking charge of the market. Heading down to our main currency pair, the Euro USD pair. If we take a look at our volume, we see that we had a nice influx of volume last Friday. This could potentially indicate a move to the upside. If we take a look at our 4-hour chart, we in fact see some more bullish movement. No indication that this trend is willing to slow down. We have a lot of wicks at the bottom indicating that price is retracing down, but buyers are keeping the price elevated. I think as soon as we see some bearish volume, this could potentially be short-lived, the bullish trend that is, and then we'll head down to our near-term support, possibly the highs of 1.077 or perhaps 1.079. And lastly, guys, thank you for watching the video. If you feel that you learned something of value, please give it a like. If you haven't already, please consider subscribing. I'll be doing these market related and investment related videos every week or so, as well as portfolio updates along the way. I'll see you on the next one.